Today is Sunday, April 30. Market is closed, and we wanted to go over Starbucks unusual option activity we saw on Friday, the last trading day, because earnings is actually coming up on May 2nd after hours. So we have about 2 more days, and we also wanted to follow up on a video we did on April 14 on this day. We had made a video. It was titled something like, "Can Starbucks stock make new highs?" And apparently it has. So those unusual options that we saw on April 14, when this 110 price was the high at that time, definitely it has broken that. It has since gone up about 6%. It was overbought on the technical indicators, and so it continued to become overbought. And so this is one example of how unusual options activity was a lot more predictive than the technical indicators. So if you haven't watched that video on April 14, this is the day we made it, on this day of the candle. We'll put that link at the top and also at the end of the video. At the top, if you have info cards turned on, you can watch it right away. We'll also put it in the description to follow up on that April 14 video that we made on Starbucks, so you can learn how we analyze those unusual options to make that decision to go bullish on Amazon. If you recall, this was the trade we did. We did a diagonal bullish trade here. And so currently it is worth a lot more. It's profitable by $67, and we had paid $108 for it. So that's 67 divided by the 108 cost. Times 100 is the percent. So right now it's 62% profitable. And so we may take the trade-off and switch a different strategy because now earnings is coming up and this trade has been profitable. And we may have to switch it based on the different volatilities now. And so let's go over those unusual options that we saw and detected on Friday to see, are the large institutions placing their trades on a bullish or bearish or neutral Starbucks after earnings. So the one most significant one we saw, because this 1500 one we saw, this one looked more like a covered call where they were trying to hedge their stock positions here. And so it wasn't as significant because covered calls can also be profitable if it goes up, and it reduces the risk on the downside too. And there could be many reasons why a large institution maybe doesn't necessarily want to take off their shares for earnings, or maybe they need to hold on to it for certain tax reasons, right? So we want to look at unusual options that are spreads. You see here on the conditions. So this one here at 213 right here, these were done at the same time here. You'll see these 120 strike calls and the 117 strike calls, May 5s. This was 1,000 of them. This was 500 of them. It's also connected to a spread because these are connected trades. So this was done as a strategy. And so what is this strategy? Well, let's take a look at it. May 5, and here we go on the options chain. You'll see on the May 5, the 117 are over here. On the May 17th, you'll see, and the 120s are here. So we believe what they're doing here is that what they're taking the 117 and selling it, and then they're buying two of these 120s, which is why you saw that the 120 strike calls, there were 1,000 of them, and the 117 had 500, so it's a ratio of 1 to 2. So this is the trade. Let's take off our diagonal trade. This is what it looks like. It is a bullish trade. However, it is also hedged to the downside. Starbucks at 114. If it were to drop, there is no loss, or barely any, -2, right? It may even be positive depending on if they received a credit for it, because it's so low that basically they could have gotten a credit, so it may not even be a debit at all. So this kind of a trade is one where Starbucks has to rally past this break even, which is about 123, right? 122.99. So if it rallies past that, then it would be profitable. Otherwise, 122 is quite up there. You'll see if we zoom out more. Let's go out more to see if. Okay, yeah. Well, Starbucks has made a 126 back in 2021, so it would have to rally after earnings close to, I would say 123 is about 7% up, right, for it to be a profitable trade. Otherwise, if it crashes, there will be no loss because this type of back ratio spread has a built-in hedge already. And so that's why we're going to take most likely our profits on our trade and then readjust, because this shows that the large institution is a little wary and cautious, and being very cautious by putting on this hedge as well as this other covered call trade here as well. So we may do the same type of trade, the same back ratio trade as well. Yeah, we'll have to see, because there is still 2 more days, tomorrow and then May 2nd, the day of May 2nd, to look at the unusual option activity on Starbucks to make a final decision. So make sure you are subscribed. You have that bell icon turned on to be notified whenever we see anything unusual on Starbucks. And you can learn more of what's going on with Starbucks right before earnings. Okay. If this was helpful, you learned something, please smash that like button and make sure to watch that April 14 video. It has a lot of insight as to how we predicted this high here at 110 was going to break, because all the technical indicators were overbought, and lots of people were saying this is not going to break. But look, it did break. It broke it. And so this video on that day, if you study that video on how we made that decision, despite all the technical indicators pointing to this resistance of the high breaking down, we still took on this bullish position. And so, yeah, we'll put that video at the link at the end of the video, and also in the description. All right, please smash that like button. Helps us grow and make more videos for everyone. And take care and good luck.